There are very few sure things in resource speculation, and this is, I think, about as close as you get. Now, I have to say that it's not necessarily, I'm not saying that it's necessarily going to double from here or something like that. It has already, uh, you know, quintupled over the 2015, 2016 lows, and it's pulled back to merely quadruple plus a little bit those prices. But that price level, never mind the ooples, that price level is high enough to incent mine supply.
I am honored to have with me Lobo Tiggre, who is the head honcho over there at the Independent Speculator. Lobo, how are you?
Head honcho. I'm used to being introduced as that jerk from Casey Research, but I guess I need to get used to having my own shop now.
Well, you're moving up in the world. That's good.
Trying to.
I really appreciate you being here. This is the first time I'm interviewing you, so I'm super honored to be talking to you. And this has got to be like your Super Bowl, because the commodities super cycle right now is absolutely incredible. Before I talk to you about like specific investment type stuff, like top down, how do you kind of like view the economy, whether it not be the global economy or the U.S. economy right now from, just kind of a general standpoint?
Sure. Well, my macro is that the global economy is clearly weakening. We've seen all kinds of signs of trouble in Europe. China looks to be slowly kind of sort of recovering. The numbers look very positive, but who believes Chinese official statistics anyway?
Yeah.
But that aside, okay, they're recovering somewhat from the lockdowns, but it's really interesting how much they're struggling with it. And to give credit where due, Communist Party of China notwithstanding, they are trying not to inflate a new bubble, right? They're trying not to let real estate go crazy and ghost cities all over the place again. But they've got a command and control economy, and it's difficult. And they locked their people down for years when the rest of the world didn't, for so long. And that has had a lasting impact. So I see the Chinese economy as weak as well, or very vulnerable at least. And I also think the U.S. has been in a recession. And I don't just mean the 2 quarters of negative GDP we saw before. GDP is a bogus statistic anyway. I mean more of the rolling recession people keep talking about. We've had a recession in earnings. We've had a recession in commodities. We had a recession in freight and manufacturing, all these different things, just not that consumer/laborer who keeps spending. That is, anarchism aside, even mainstream people will tell you labor is a lagging indicator, the last shoe to drop. So I'll either be right or wrong on this, Matt, but I'm still on team hard landing. I think it's happening. I think it's happening this year. The long and variable lags are not even overdue yet. So, team no landing is very premature, I think, in their victory laps. And we'll see. We'll find out. But if I'm wrong, it's very inflationary, I think, the outcome. So I think that's good for commodities anyway. If I'm right, it just means we go through the ringer a bit before the money helicopter flies. And then it's good for commodities. Then it's inflationary. So we'll see.
Yeah. A very interesting thought I've heard get more kind of like credo over the last maybe 6 to 12 months is this concept that technically the U.S. and for the most part, at least the westernized economies of the world have actually been in this rolling recession since 2008. And that there's been a lot of basically artificial support that's been necessary to get us from that point to where we are now. Do you think that's also had like some effect here in terms of, I think a lot of people would tell you, oh yeah, like leading into 2020, things were like great, but I've heard some very contravening views as far as that goes.
Several ways to answer this, but let me quickly diverge and say, if things were that bad, like if the powers that be needed an excuse to do a rug pull, why the beep didn't they do that in 2020? They had the perfect excuse. Like if you're the Fed and you know the whole house of cards is coming down,
Yeah.
well, screw it. Push that sucker over in 2020 and blame it on the pandemic.
Yeah.
But that's not what they did. So that makes me suspicious of these, this idea that things were about to fall apart, or that they knew it's all an engineered thing. If they were going to engineer something to get themselves a get out of jail free card, clearly COVID-19 provided that opportunity and it wasn't taken. And I think that deserves serious thought. Now, that's not to say I'm not sympathetic to the overall idea of things not being as rosy as they were. I think that's clearly true. The ridiculous things that were done as a result of the GFC 2008, I think those chickens have yet to come home to roost.
Yeah.
People saying, oh, well, you see, the Milton Friedman was wrong. We could print lots of money and there's no inflation, no inflation, no inflation. Well, I think that's wrong. The way that the money printing was done, it wasn't like what we saw in 2020, where people got thousands of dollars of stimmy checks. I mean, I think one of the shrubberies sent people, like an $80 stimmy check or something. I mean, it was peanuts compared to what was done in 2020. What was done, or the way that was done, the way the liquidity was injected, was straight into the financial system. And lo and behold, we got, huge inflation in those assets.
Yeah.
So I think it's a mistake to just say, oh, look, you can print all you want and there's no inflation. And clearly Team MMT, if we're going to keep dividing everybody into teams, they're on the retreat now. It's funny how quiet they've gotten since, 2022 showed that, inflation really does exist. It's not the great pumpkin. So where I'm going with this is I'm sympathetic to these arguments, but at the end of the day, we don't want to be quibbling about a number of angels on the head of the pin, right? Is this really a recession? Is it not a recession? Were they manipulating the statistics? It could be yes to all of that. But the fact is that 2008 was a long time ago. Yeah. And people got jobs, they built businesses, they move ahead. Many people made a lot of money. And life did get better for a lot of people at a time where my dear mentor said we should have been going into the Greater Depression.
Yeah.
So I think there's at some point you need to put the theory aside and look at reality. And the reality is that there was recovery after 2008 that is material, and it certainly impacted our investment outcomes. If you went to your nuke-proof bunker in Idaho in 2008 and never came out again, never invested, like the opportunities missed would be enormous.
Yeah. Yeah, it's and to lend a little bit of support to that position, you had hearkened to China's efforts recently. Even they have kind of adjusted course, right? In the past, they would have broken out the helicopter. It would have had a different logo and color to it, but they would have broken out the helicopter too, right? I think they've seen at least the chink in the armor of the MMT crowd in the West. And I think they've seen some issues too, where, they weren't getting as much bang for their buck when it came to, some of the stimulus and some of the subsidizing that they were doing in certain industries. I do find it's really crazy that all of a sudden everyone in the West is almost kind of shaming China for dumping product, right?
Yeah,
and at the same time,
overproduction is now the demon of the day.
Yeah, but at the same time, everyone's like, "Oh, inflation!"
Yes.
And you're like, "Well, what could be more deflationary than a bunch of cheap crap, right?"
Well, no. Let me push back a little on that. I'm agreeing with you, but this cheap shit from China argument, it's a load of dingo's kidneys.
Oh yeah.
I mean, there were times in my life where I didn't have 2 quarters to clink together in my pocket. And this so-called cheap shit from China in Walmart was a material benefit to me.
Yep.
Like I had little kids and, you don't have a lot of money. So what do? You go camping and you go on bike rides and things like that, right? It didn't cost anything or cost very little. And to be able to go to Walmart and buy like one of those 2 kid carriers to put behind my bike for $50 or something, as opposed to going to a Schwinn dealer and paying $500 for it, or any number of things, the bike itself, this so-called cheap shit from China made my life, my quality of life so much better when I didn't have money.
Yeah.
I really push back on that notion of cheap stuff from China, but it's directly relevant to what you're saying now.
Oh,
This
yeah.
war on cheap stuff from China is really a war on the standard of living of everybody in the lowest rungs of the economic ladder. I've been there. I know what this would mean if I didn't have access to those goods at that time.
Yeah.
And it pisses me off that the people that are advocating this are the ones supposedly championing the poor.
Mm-hmm.
It's kind of like that argument of, oh yeah, I don't remember which one it was. I don't want to blame the obvious suspects, but there was somebody out there promulgating this argument that inflation is actually really a tax on the rich. Like everybody can see that's bullshit now, but before it started kicking in, like 2 years ago, 2.5 years ago, before we were on our way up to 9, it was, I don't want to say it was Krugman because I don't know, but it was somebody like that.
Yeah.
Who was saying, oh, inflation, it's the rich people who have all these investments and the inflation is going to hurt them more. So it's okay. Don't worry about it. And, what a load of dingo's kidneys that turned out to be. Anybody should have been able to see that that was just a bold-faced lie. Yeah. But at least now that's been debunked for anybody paying attention. And I forgot where we got on this, but
yeah, no, I'm a
bit of a rant here, Matt, but yeah, this
just the ridiculousness of
the macro somehow
inflation being an issue and poo-pooing, cheaper goods, right?
Yeah. Yes. And it's interesting, no more crises in my lifetime. Yellen is over there in Europe trying to convince our allies or U.S. allies to continue beating up on cheap stuff from China here.
Yeah.
It's just like one of so many things that shows you that whatever their motives are, I'm not promulgating a conspiracy theory here, but clearly inflation is not job one if public enemy number one is cheap stuff from China. These two facts simply don't add up.
Yeah. It's you will spend your entire life being disappointed if you try and find logic in politics, right? Like,
or if you assume that they're all lying, how do you tell a politician is lying? His lips are moving, right?
Exactly.
Or she, we want to be egalitarian these days. But if you assume that their motives are not what they say, but their self-interest, how do I get the most votes? How do I get ahead? If you assume maximum greed on the part of every politician, then I think 99.9% of their actions make perfect sense.
Oh yeah, definitely. Yeah, it's the maybe I should rephrase, the logic you apply to life is not the same as the logic that they apply, most definitely. I mean, if you put yourself in their position, one could make the argument that it's completely logical, right? Especially because they live in somewhat of almost a different world, right? But I digress. We don't have to talk too much about politics. I would love to talk about more of kind of like the investment space. And so I've heard you talk about kind of like the one-legged stool aspect of the economy right now. And I think I agree with you. I think we're in a very weakened state, and kind of like 2008, I think a lot of people are just waiting for the last straw that breaks the camel's back, right? Not that you necessarily place odds on something like this, but I mean, what is it for you? What do you think ends up being that thing? Is it just the labor market finally gives up the ghost and that's what ends up causing it?
Well, yeah, that is the one-legged stool. So, and the latest data has shown chinks in that armor, if you will. So that leg is wobbling, and I think that's really significant. And we will see in the near term. I'll either be right or I'm wrong. I mean, that if I'm correct, that cannot last. Mm-hmm. But it's this optimism about this is really quite striking, and the myopia about this. But in terms of it's, what tips it over? It could be anything, Matt. It could be literally anything. Consumer confidence is one of those things. It doesn't have to be this trend of, oh, it's getting worse. It's getting worse. Mm-hmm. Something creates an aha moment, a wake up moment, and consumer confidence can just go like that. Mm-hmm. And that means, hiring decisions, expansion decisions, all this stuff. Labor is the famously, last thing to go in the economy. The fact that it's starting to wobble more now, I think is very significant. And we'll just see. Like we're getting to where we're there now, and it'll happen or it won't. And it'll be like that old joke, how did you go bankrupt? Slowly at first, then all at once?
Yeah.
I think it was Hemingway, right?
Yeah.
I think that's what it's like. That's where we're at now. And there's a lot of data that supports this, the credit card delinquencies, auto delinquencies, or credit card debt, itself, the rates of change here. And then there's this one big one would be what I call the Gundlach indicator, to give credit where due to Jeff Gundlach, the bond king. He talks about when the long-term unemployment line is crossed by the short-term. And that has, going back 80 years or so, a 100% track record of preceding a recession.
Yeah.
And that's exactly where we're at right now.
Yeah. And it's what's interesting is you invoked, kind of like the bond market and whatnot. We're in like this age of very unprecedented things too, in terms of just the extremity of some of these, whether you want to call them, the disjointedness or disconnects within, the underlying economies. I mean, just look at how inverted the yield curve has been, the 2s10 specifically, for an extended period of time, and just how deep it got. And, from my position, every day that stays inverted, there's more damage done on the financial side, right? Or at the very least, more, I guess you could call it constriction that's happening on the financial side.
Well, I'm not a bond king. I got to say, I've never bought a bond in my life. I don't trade them, and more power to the folks that do that. But I'm sure you've heard, and I understand too, from the track record, that as destructive as that inversion may be, it's the disinversion that signals, that we're getting towards the recessionary probable payday. That's not a perfect track record, but it's a pretty good one. It's like 90% or something like that. And we have seen disinversion. So that's yet another signal that these long and variable lags, far from being a no-show, may be on their way to showing up in the months immediately ahead.
Yeah. So in this environment, with everything kind of swirling around, you like orange stuff, to say the least. It's like you like gold, and you like, well,
maybe not the orange man so much, but
no,
we're going to get political.
But or maybe I should say yellow stuff. Gold and uranium have really been the two things that you've been championing.
And if you throw copper in, then the orange makes sense.
Yes. Yeah. 100%.
So copper is an after the recession bet for me. I'm very, very bullish for decades to come. I like it a lot. But yeah, right now it's uranium and gold and silver. I have to say I was more skeptical about silver because it is increasingly treated as an industrial metal by the market. And even diehard silver bulls will tell you that silver typically lags gold at first and then catches up.
Yep.
So for the new gold breakout, well, even the silver bull logic tells you that silver will lag at first. But that's actually not what's been happening. Silver's been acting wonky for years now.
Yeah.
Until recently, it was more closely correlated with copper than gold, which you don't want to see as a fan of monetary metals. But recently, it has started coming back and tracking gold more closely than copper again, which I'm very pleased to see. So, the tried and true wisdom of silver's pattern is actually just not reliable at the moment. Silver never caught up after the 2020 breakout, and now it's not lagging. Yeah. So you can take that however you will, but what I've decided to do with it was it's not lagging, and I'm bullish on gold, therefore I need to be bullish on silver, and that has worked out really well. I got to say, I don't get them all right, but by the way, I missed copper this year. It hit an all-time high nominally this year. But I sure got it right on gold and silver, and well before we were talking 30s, right? So I'm a happy camper on that front.
Oh yeah, and it'll take a couple days for this interview to go live, but silver's up another 5% here at the tail end of the Memorial Day weekend. I mean, it's been absolutely incredible, at least recently. And
sorry, one more thing, not to be a too uber silver bull here, but lest we forget. Gold has hit a series of new all-time highs, nominally, of course, not adjusted for inflation. Whereas silver, it's barely gone halfway to its old all-time highs nominally.
Yeah.
So it has a long way to run just on that basis.
Yeah.
So it's quite interesting.
Oh yeah, and I think so. I've seen a number of videos that you've put out recently, or a number of interviews that you've done, and you've talked about the underlying mechanics of the silver industrial demand, which it makes it unique as compared to, say, gold, because gold's industrial demand is a much smaller percentage of the overall demand for gold. What does that look like for you going into the future? Do you think that silver demand is going to keep up or maybe even accelerate?
Yes. Yes to both. I'm very bullish on silver, fluctuations aside. And a lot of people get mad at me for saying that silver is now more industrial. I don't think that's just my opinion. I think that's the facts. You look at how it moves in the market, and maybe it shouldn't be. And yes, I understand that silver is a word for money in many languages, but that's the observable phenomenon right now. And if anything, in my view, this actually makes silver in some ways, hear this, silver bulls, more attractive than gold, because gold is a safe haven. As you say, it has industrial uses, but really they're de minimis. And the supply and demand, the mine supply and all that stuff, it really has nothing to do with, I don't call it the gold price, because to me, gold is money. And so it's a Forex question. So I call it the gold dollar exchange rate. And, a supply squeeze makes no difference to that. Shortage on the COMEX warehouse or whatever makes no difference to the gold dollar exchange ratio. It will go up or go down without regard to that. It's it's an economic fear barometer more than anything else. Or longer term, it's the measure of the debasement of fiat currencies in the world. And silver, though, its industrial side, none of that takes away. And somebody asked me this, and it's quite right. The fact that silver has increasing industrial uses does not take away from the fact that it's also a monetary metal. So when you have safe haven demand, we're seeing this right now as you and I speak. You see silver move on financial news that is good for gold and bad for copper. So that tells us that safe haven monetary demand is still there for silver. Great. If we're right about inflation and the commodity super cycle and all this stuff, the money helicopters and everything, that's very bullish for silver on that side. But it also has this industrial side. And if we're right about the money helicopters and the green agenda and, the doubling down on solar panels everywhere, instead of saying, gee, these solar panels keep getting destroyed by hailstorms, it's like, no, we just need to make more solar panels.
It's like the broken window theory for Keynesians, except it's the broken solar panel theory for silver bulls.
There you go. So that adds to the potential upside here. So I've been describing silver, despite people calling me Darth Silver and all this stuff. I've been describing silver as the win-win metal of the two, because if we have a reflationary boom, that's great for silver. If we have safe haven fear soaring, that's good for silver. There's more ways to win here.
It's definitely playing out, I think, very favorably for a lot of people that might have been, I guess, discounted for the last, leading up to 2020. I mean, for 10 or 15 years, gold and silver had lagged, and everyone was looking at the stock market, and, everyone likes to talk about, the current thing, right? I like to be more of a contrarian. When everyone's buying somewhere, I want to look at the place where people aren't purchasing, because that's going to be the easiest entry point. Are you would you advocate actively adding to a position here with how much gold and silver have run, or is it something where you're a little bit more cautious, where you would have been more active way back when, or it's just
I understand the question, and there's two completely different answers. Completely different bases. If we're talking gold and silver, bullion, I'm always a buyer. I don't care what the exchange ratio is, because I'm not buying it as a speculation on higher, exchange ratios. I'm not even buying it as an investment. As they famously say, gold pays no interest. There's no coupon to clip. I get that, but that's not why I'm buying it. I'm buying it because it's gold. I can hold it in my hand. It's worth something. It's the financial asset that you can be long with no short. There's no counterparty risk. And in case of emergency or in case of great opportunity, then I can dip into my savings. And whatever the exchange rate is, whatever happens in the world, I know that somebody will buy it And I have actually lived this in my life. There's a story called it's a free article called, I think, "In Defense of Hard Money."
Mhm.
I've actually had this happen to me, both on the emergency side and the opportunity side, where I've dipped into savings, which is what the savings are for, right? So
Yeah.
you're asking me, when is it a good time to save? Well, it's always a good time to save. If I have extra money that I don't need right now, I'm not going to invest it, that I want to sock away for long term, then I truly don't care.
Mhm.
I might not go into the coin shop on a day where it's like this,
Yeah.
right? But I'm not waiting for a market bottom or something. I'm just buying when it's time to save. Okay, so let's put that aside. Bullion is for prudence. It's insurance. It's savings. The stocks are the speculative investments.
Yep.
And there, yes, I'm looking at, am I bullish on the market? What time is it? And so here's the thing. There's good news on this front in that the stocks have lagged. They have underperformed.
Yep.
There's several reasons for this. I think the biggest and easiest one to understand is that in 1980, gold spikes, goes back down for a long nuclear winter eventually. In 2011, gold spikes, struggles sideways a little bit, and it goes back down for another long bear market. So it's not just recency bias. It's actually all of gold's track record since the dollar and gold were separated by Tricky Dick Nixon in 1971 says that gold spikes and then comes back down. So the smart money saw gold spike in 2020, and they've been expecting it to come back down.
Yeah.
And if you're expecting the metal to come down, the stocks are going to lead. And so I think that's what the market has been telling us. Gold's going down any day now. Gold's really going down. Well, this year gold's going down. And that's why the stocks just haven't been able to catch the bid that they normally should. Mm-hmm. And I think what we're seeing now is the market's starting to say, oh, maybe gold isn't going down.
Yeah.
Right. And so you're starting to see the gold and silver stocks finally, taking off again. And not just, a little bit, but like when silver went over at 31, 32, we're looking at double-digit gains in a day on these stocks. And gold also, when we got closer to 2,500 and 24, the stocks did not ignore the metals anymore. They moved with leverage. So I think that's terrific. What we have is A, proof of concept that the stocks aren't dead. Mm-hmm. B, multi-year, if not all-time nominal highs in the metals. Mm-hmm. And C, the stock's still relatively on sale. I won't go to the next finger there.
Yeah.
and that's terrific. Like, how great is that, where you can have a bull market happening, but still have a chance to buy the most leveraged assets as though, the metals were still on sale.
Right. Yeah. It's that dynamic has definitely been super, I would say, odd to see it play out. And I don't know what I would call it, market denial or, just a lot of people thinking that, this time is going to be different, that kind of thing. Or maybe this time being the same. And
sorry, Matt, if I can just jump in, there's
Sure.
There's another free resource on the website. There's an article called Are Gold Stocks Broken? So if you don't see that on the homepage, you can search for it using the search tool. And there's charts in there. There's a whole explanation for more than you and I just shared. But if you're skeptical, if you find yourself wondering, well, is this a head fake? Is it for real? Look at those charts, look at the arguments and see if it makes sense. And for whatever it's worth, I'm going heavy into the market. Even though the metals are up, there's enough opportunity there that I'm a buyer. I just bought 2 stocks last week and I've got more on my shopping list right now.
Mm-hmm. Yeah, it's it definitely feels like this is, even in light of the economic environment that we discussed at the top of the interview, it definitely seems like this is like the final rally, right? But what a lot of people forget is that final rally before there is some kind of like big correction is typically has a lot of tailwind. It has a lot of thrust behind it. And it definitely feels like that, at least in certain areas. I'm some of the trades look really, really scary. I mean, like whether it's like semiconductors, like NVIDIA is pretty much like the only game in town, with the exception of maybe, like AMD and Texas Instruments. But outside of that, there still seems to be a lot of thrust, and especially because I'm impressed, like oil is holding up really well. And so like you have some of these other commodity based, what I would call kind of like the old guard type of investments that are doing well. And I think they're going to continue to attract capital because, I mean, the risk ratio to go out for, just buy NVIDIA here after it gaps up 2 times in 3 days, like, is absolutely ridiculous. Like, I can't even wrap my head around something like that, right?
Yeah, but ridiculous can go on to becoming absurd, and then Elon
Oh, yeah.
pushes the ludicrous mode button. So, I don't know. I've never told my readers to short NVIDIA or anything like that.
Oh, no, definitely not.
I'm sure glad I didn't.
That would be suicide right here.
Well, I don't know about right here, but if I had done it in the past, we would have had to add our shorts, right? And
Yep.
they're not tasty.
Yeah.
So this is actually an important point. I'm a metals and mining guy primarily, and I talk about gold and copper or uranium, whatever I like. I'm not saying that you should only ever buy gold and copper, uranium, silver, whatever I like. I'm saying for that portion of your portfolio where you're looking to speculate in the natural resources sector, I can help you with your due diligence.
Sure.
What you do with the rest of your portfolio, whether you buy, the magnificent 7, 5, 4, 3, 2, 1, or whatever they are these days, or real estate or whatever, I'm not qualified to help you in those areas. All I can say is it makes a lot of sense to me to not put your eggs all in one basket, and you should have something else going on besides just, gold stocks or silver stocks or whatever your favorite metal is.
Sure.
I think that's really important.
Yeah, most definitely. Yeah, it's before I move on, I want to ask you about uranium, but before I do that, just to make sure that I get it for anyone who's watching or listening, your website is what?
It's independentspeculator.com. And thanks for putting the carrot out there before everybody stops listening. So let me just briefly say, the simple thing here is sign up for my free weekly email. It's free. Mm-hmm. You may not like it. You may not agree with what I have to say. That's fine. I'm a big boy. But the one thing I can promise you is that I will not spam you with a flood of daily advertisements. I hate that. Check it out. You'll get 1 email per week, and then you can decide whether or not you think I can be your due diligence guy from there.
Yeah, I appreciate that, because I tell a lot of people I'm very skeptical of just stock market investment in general, because I think a lot of people think that that's, retirement on easy mode, and they have no concept of risk management because of it. But what I tell everyone is, if you do want to put money into stocks, like, obviously I'm not the person to listen to, but I'm going to talk about other things that, I can be a little bit more supportive of, but also like intelligible, about. So, no, I appreciate that position wholeheartedly. All right, let's finish up with uranium. So uranium over like the last 2 years has had a hell of a run just in terms of the price of uranium. What's really driving that? Is it just simply supply demand?
Simply.
Yes.
I mean, it's real. There are very few sure things in resource speculation, and this is, I think, about as close as you get. Now, I have to say that it's not necessarily, I'm not saying that it's necessarily going to double from here or something like that. It has already, quintupled over the 2015, 2016 lows, and it's pulled back to merely quadruple plus a little bit, those prices. But that price level, never mind the ooples, that price level is high enough to incent mine supply. But plus or minus $90 is more than enough for not even just the low-hanging fruit and the lowest cost producers to ramp up production and the lowest cost projects to come online. Even the mediocre uranium mines make money or can make money at these price levels. So we are in the process of seeing low prices, curing low prices here. But it takes time. It takes a lot of time. There's another free report, sorry, but there is a free report on uranium, which we happen to have just updated. So there's a new version of this with the latest numbers in here. And our view is that the low-hanging fruit, like, the existing low-cost producers that are in fact ramping up right now, and the low-cost projects that are in fact being built and or coming online right now, it's not enough. That is not going to be enough. The demand side has really increased so much. And it's going gonzo. I mean, it's, after the war in Europe, the Europeans have realized their energy vulnerability, and, it just isn't all that sunny in northern Germany, even though they have had, interesting solar power fluctuations. Right? Anyway, Europe is going nuclear, Germany notwithstanding. And, and we're not just talking like a plant here and there. We're talking scores of nuclear reactors. Okay, that's still a discussion, but that's direction. Meanwhile, you've got China and India just building these things up the wazoo. China alone has scores of them. Like, not just theoretical, like this is happening.
Yeah.
And, the previous secondary supply, Fukushima, Japan, all those idled reactors, excess uranium, that's all gone. Japan is restarting, has restarted, is restarting, is no longer selling excess uranium. The mine supply is not enough. The market is not in balance here. And low prices are starting to cure low prices, but it will take years. So I'm very bullish. I do think spot uranium will go higher, but it really doesn't have to do much. If it just goes sideways, the companies that go from, spending money on exploration and development to making money on production, they get a market re-rate. I call that the pre-production sweet spot, and it works in spades in the uranium sector. That's another free download. There's a PPSS report. But anyway, I have to say one more thing here, Matt, because it's very, very important. This is almost literally a speculation that can blow up on us, right? It can melt down. If there is another, I'm not sure if Fukushima would do it, because it was really the tsunami that killed people, not the nuclear incident, which was an emergency. But the authorities responded and they took care of the emergency, right? So if anything, I think Fukushima is a testament to the robustness of the power plant designs, that they were able to deal with that emergency. Really, 3 Mile Island was a nothing burger. What's happened in Ukraine, the biggest nuclear power plant in Europe has been shot at, it's been shelled, it's been cut off, all this stuff, and no radiation leaks. Like, this really shows how safe nuclear power is. So the one big one is Chernobyl. If there is another Chernobyl scale event, especially if it's not a former Soviet reactor, that would be bad. We would, uranium prices would tumble, the stocks would crater. There's just no doubt in my mind. So I'm not trying to paint a doomsday scenario. As I just said, these are very rare events. There's really only been one that's been really bad. And that's a great track record in 70 years. But if it happens, our uranium stocks will tank. Don't kid yourself. This would be very bad. I'm willing to go there. I'm willing to take that chance because it's so rare that I just think I'm psychologically equipped to set it aside, accept the chance of my money going to zero, and bet on the, I think, still terrific gains to be made in that space. That risk management conversation is a huge one, because I think a lot of people get on, a platform like this, or they'll get onto one of the broader, investment channels or something like that, and they'll talk their book, right? And they won't necessarily steel man the contrary argument. Exactly. That's, and you know what, we were talking about this market sentiment and how negative it was, particularly for silver. Like, silver got so hated in recent years. I think it's exactly because of this thing. Silver bulls went over the top, telling everybody it was off to nirvana, silver heaven, stack now, and all this stuff. The silver squeeze, the Hunt brothers showed how difficult it is to squeeze the silver market. So, and then it didn't go to the moon right away, and people got pissed off, people got disappointed. Anybody who got introduced to silver a few years ago when this was happening, they top ticked the market, and of course they hate it. So this is why, as you say, steelman the opposite case, and I think that's very important in uranium, and we've done it a bit with the gold and the silver as well. If I'm wrong about the recession, things may play out differently.
I appreciate that. That is something that I think a lot of people they overlook, especially if they're an independent, retail type investor.
Or they get mad at me when I say anything other than it's going to the moon. Right?
Yes, it's
we're grown-ups here,
and that's actually why I do ask some of the questions that I ask, is because really I'm more so interested in the things that people aren't looking at right now, right? And so uranium has been one of those things. Uranium's run, gold's run. silver's run, which doesn't say that it can't keep going, like for any of those instances, you know.
Right. Well, the not looking there, Matt. Sorry, you wanted to wrap up on uranium, but let me just answer that.
Sure.
I think that the no-brainers are copper and oil
Okay.
after the recession.
Yeah.
Like if you think I'm wrong and there's no recession, copper and oil are buys now, the best companies. Like, okay, copper, but copper and oil, great, compelling value propositions in copper and oil, I think are buys right now.
Yeah.
After the recession is where I'm planning to buy.
Mm-hmm.
But either way, you know, a long-term hold I think should work there. But I just think I'll get lower prices in the weeks and months ahead. What else? Nickel and lithium are hated,
mm-hmm.
but I agree with my friend Rick Rule. I think they're likely to get more hated ahead. Yeah. And I'm not going to categorically say I'm going to buy either one of them on the other side of the recession. I'm going to look at the market balance then, because there are reasons why both of those might take longer to recover. Oil and copper are the no-brainers. Mm-hmm. Copper's not really hated right now, but oil is.
Yeah.
And then the other, you know, big hates are nickel and lithium. Both of them are necessary metals, commodities. But I'm going to have to hold off on putting out a preemptive buy signal there until I see how the market balance is.
Yeah. No, I'm right on board with you too, because typically out of a recession, you know, those kind of like old world things. And in fact, I actually think we're moving into, I don't know if you're, you know, a follower of some of these ideas of, say, like, you know, the 40-year cycle that we're exiting in terms of low interest rates versus potentially going into this 40-year cycle of higher interest rates moving forward. But it's my anticipation that boring things will become sexy again, right? As opposed to a lot of people have been into this kind of like, you know, they want the next cloud computing, the next AI thing, the next, you know, crypto is a perfect example of that, right? I really think that the boring things in the economy are due some attention. And that would be utilities, you know, oil, you know, old dusty kind of like industrial type mining, you know, mining producers and equipment makers. I definitely think that they're due for their heyday, and they'll become at least a little more popular than they have been in the past, or at least hopefully.
I tend to agree. I wouldn't say boring. I'd say real, like anything real. And that's necessary. Like I was just talking in another interview about how this isn't my original thought, but I think it's a very true thing for people to keep hold of in your mind. If it's real, anything real in the world, if you don't grow it, you got to mine it. That's the only two places, you know, physical things come from. And if you've got to have it, you got to grow it, you got to mine it, and you just can't grow copper on trees and stuff.
Yeah.
So
not yet, anyway.
Not yet. Well, I mean,
they're probably working on that in Japan or China.
That could be a very long conversation, but that would be an interesting mining technology.
Yeah.
But yeah, no, I'm with you. I think that's a long-term play, and you know, maybe, you know, the AI, the next AI whiz will be your speculation. Meanwhile, the commodities will be your safe area of your barbell.
Yeah. Oh yeah. Yeah. We go through these cycles. I mean, we just talked about some of them in commodities where it's like, you know, it's all psychology, right? Like, so the fervor typically happens based off of what everyone says the thing is going to be in 10 or 20 years. And so you get that nice initial big pop happen with the World Wide Web and all the .com stocks, right? You get that nice big pop, you get a bubble because just everyone needs a piece of what's going to happen in 20 years for some reason.
I completely agree with you. I think this is a very important thing with all the AI craze. I sincerely believe this is revolutionary. I think it's, you know, like the internet, it's AI changes everything. Like that's real. That's happening. You know, 10 years from now, we'll have, you know, we will know who the winners are and stuff. But that doesn't mean that today's market darling has to keep going up next year. I mean, maybe AMD has an NVIDIA killer chip under development right now. And I'm not saying that, it's not a prediction. I'm just saying that could happen.
Yeah.
You know, these people who are saying it's all NVIDIA, they've won. It's the one ring of power that will rule them all, right?
Yeah.
There could be an NVIDIA killer like announced tomorrow and we wouldn't know it today.
Oh yeah. Yeah.
So,
or if we do go through, you know, an AI winter, right? There could be a company that doesn't even exist right now that ends up being that too, you know?
Well, you know, Apple and Microsoft, they were there from the beginning, before the dot-com. It's both Apple and Microsoft were 100 baggers if you got in early enough.
Yeah.
But if you look at the original Microsoft team, it was a dozen hippies. Like, who would have bet on those guys being, no offense to hippies, but, a tech company success story. Amazon lost money for so many years. It was a joke.
Yeah.
It's kind of like, oh, China banned crypto again, right? Back in the day, it was like, oh, Amazon lost money again. But that became 100 bagger at the end of the day. So this is, I think, an inherently chaotic situation, very difficult to predict.
Yep.
But when we see somebody that's actually got the goods, like the killer app, not just in theory, not just in hype, not just a great deck, right? But they're actually building something that makes sense, like Amazon, perhaps. I think there'll be plenty of time to make money then with less risk.
Oh yeah, yeah. I'm definitely looking forward to that process, especially, I don't know if you follow crypto all that closely, but I follow crypto probably a lot more closely than I should. But it has that feel to it. It has that that initial boom, and then there's going to be a bust, and everyone's going to forget about it. But then what will happen is from that after the volcanic eruption, right? Like the new growth will take root, or the things that survived because they actually had strong business models or use case will then become what that future really looks like. And so it's exciting. I mean, it's an exciting time to kind of be involved in investment too, which is fantastic. So,
yes, indeed.
Yeah. Well, I want to thank you very much. I know your time is valuable. I don't want to keep you too long. But that being said, I know you're out in Warsaw in beautiful Poland. I'm going to ask you one last question, and it is not investment related, or at least not directly.
Okay, go ahead.
The ethos of Lobo Tiggre. How did that come about? What's the ethos of Lobo Tiggre?
The ethos.
Yes. The origin of the name.
Oh, well, that's something separate. Well, I've always been called Lobo. You'd have to ask my family how that came about.
Okay.
It is my legal name. It is not the one I was born with.
Okay.
But I started writing anarchist stuff. I had an online journal called Doing Freedom, and it was very hands-on-y about how to avoid, shall we say, imperial entanglements.
Yes.
And a pen name seemed like a good idea. I wrote a novel. It was a Y2K novel. I did quite well with it, and so I needed a pen name. So I picked up the Tigre, which was another nickname of mine, and I combined them, and I went with Don Lobo Tiggre, which was a play on Don Quixote, who's always been my hero, or one of my heroes, up there with Mark Twain and Richard Feynman. Anyway, and so I became more well known that way than any other way, and like people would write me a check or something, and I couldn't cash it, so I legally changed my name. So my name actually is now Lobo Tiggre.
That's fantastic.
Don was a title, as like Don Quixote.
Yeah.
And so that's how it happened. And then when I started writing for Casey Research, it seemed like a pretty fruity name, not to be taken seriously in a serious financial publication. So we went with Louis James. Everybody trusts a guy with two first names.
Yeah.
Right? But then that became the brand. And so we've kept Louis James alive. It's the name of my company, Louis James LLC.
Okay.
But since transparency is the central thesis of the business, I have a fully transparent track record, another thing you can check out for free on the website. Mm-hmm. And I show my trades, everything, screenshots of the brokerage orders, fees, everything's there. So I just didn't want to have a new pen name. I wanted to use my real name because, and by the way, Doug outed me so many times anyway. We were trying to keep a firewall there, the Louis James, but Doug would be on stage and he'd say, well, what does Lobo think? Or Lobo say, right? Yeah. And people would go, who's Lobo? Right? So anyway, I just kind of came out of the closet. There is a Who is Louis James essay on the website if anybody's interested. But I just I chose a name that I think really represents my soul, and it's
Yeah.
both combative as an anarchist tilting at windmills,
Mm-hmm.
and also kind of self-effacing in that, who can take Don Quixote too seriously? I don't want to have delusions of or self-delusions of grandeur here.
Yeah. Yeah. Well, what's interesting is just last night something sent me down a rabbit hole where someone mentioned the allegory of the cave by Plato, if you've ever heard of it.
Yeah.
And the fact that Fahrenheit 451 included a lot of inspiration from that allegory. So I rewatched Fahrenheit 451 last night. And one of the first book titles that you see getting burned is Don Quixote. It's like, so it's really funny how you mentioned that. It's like very synchronous. If you see it that way,
I have to say I didn't. The movie wasn't bad. It was true to the story at least. But the book is just it's a beautiful work. It's one of those not fancy, not frilly, not highfalutin language.
Yeah.
Just the idea of it, the execution, it's beautifully done.
Very digestible. Yes.
Yeah.
Most definitely. So, well, with that, I want to say thank you very much. I appreciate your time, and we'll definitely have to do this again. I want to see how these storylines play out. I definitely want to check back in with you.
Sure thing. Thank you very much for the invite. It's been fun.
Appreciate it.